Good morning. Hello, my friends. Thank you for joining us today for the webinar. I want to do a quick additional microphone check. If you can hear my voice, if it's coming in loud and clear. Would appreciate you giving me a little feedback. Let me know if you can hear me all right. Excellent. A couple of things from an introductory standpoint. If you do have any audio problems today, typically it's something on your end. Don't panic. If you're having a little difficulty with your audio, you can either log out and log right back in again. That usually will solve the problem. Or there is a tab at the top of your screen that's labeled Meeting, and there's an audio setup wizard there. Run through that wizard. It should solve any problems that you have. We're really excited to have a good friend into the room with us, Gavin Holmes, talking about a really fantastic plug-in to MetaStock. We're looking forward to spending some time with him, and hope you have some good questions for him. He's really one of the authorities, especially in the Wyckoff methodologies. Before we start, I do need to go ahead and read our standard disclaimer. You've seen this before, but if you just bear with me a moment, I am instructed to read this to you. This demonstration is designed to instruct you on using MetaStock and accompanying software plugins, and is not a recommendation to buy or sell, but rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. MetaStock shall have no liability for any investment decisions based on the use of their software, trading strategies, or any information provided in connection with the company. All right, thank you, appreciate that. And with that, what I'd like to do is just give you a little bit of background on Gavin. You know, he's one of the great authorities, as I mentioned, on the Wyckoff methodologies, and was mentored by Tom Williams. And so he really has a direct heritage and lineage when it comes down to this particular trading methodology. So if you're at all interested in Wyckoff, and you should be, it's been a proven track record, this is going to be a fantastic presentation for you. We have some special offers for you at the end if you'd like to try these things out. We'll go ahead and proceed with the presentation. I'll come back later on and give you some instructions on how you can take advantage of that. But we're very, very pleased to have Gavin in the room, and I'll now turn the time over to you, Gavin.
Great. Okay, thanks, Dave. And hopefully you should be able to see my my PowerPoint slide. If everyone could just check that you can hear me okay. And welcome to all of you. And I hope you're having a good morning, good afternoon, or good evening, depending on where you are. You can probably detect by my accent, I'm from the United Kingdom, originally living in Chicago for 15 years. I moved back over to England to run a hedge fund here called the Tom Williams Fund. Dave touched a bit on Tom Williams. We'll talk a bit about that today. We're going to be doing, I've only got limited time. We've got about an hour to show you a lot of stuff. I want to welcome all our TradeGuider customers and tradingthemarkets.com members into the room. I know some of them are here. In fact, can I just ask before we do start, how many of you here are currently TradeGuider customers or members of tradingthemarkets.com, our alert service? Can I just ask? Just type in yes. I do recognise quite a few people here. Yeah, hi guys, hi girls. Good to see you. Okay, good. Quite a lot of you. Great. Okay. What we're going to do today, we are going to go. I'm actually in a couple of positions at the moment. I want to talk though to the people who have come from MetaStock who don't know anything about volume spread analysis or indeed the Wyckoff method. Now we're going to, as I say, we've got limited time, so I'm going to get straight to it. I'm not going to mess around. My name is Gavin Holmes. I was taught to trade by a former insider, a syndicate trader. In the last few weeks, one of our websites, which is www.marketmanipulation.com, which I have owned for 7 years, has had more hits in 3 weeks than in the entire 7 years that we've had that site. Perhaps, Dave, you'd be good enough just to type that website in for me for the audience. It's www.marketmanipulation.com. Now, the reason for that, and I was a little bit surprised as to what I was trying to find out why is there's so much news at the moment about market manipulation. Well, this is a very recent article that was in Reuters. And by the way, today's seminar is not about conspiracy theories at all. So if you're a conspiracy theorist, you're in the wrong place. I'm actually a former police officer from the United Kingdom. I served with the Metropolitan Police and the Hampshire Constabulary, where I currently live actually in Hampshire. But what I'm going to show you today is, in fact, the markets are rigged. Michael Lewis is completely correct. He wrote the book Flash Boys, which has been widely credited with blowing the roof on market manipulation. But what I want to show you today, more importantly, is how we can recognize as traders and investors unusual activity that we can follow to be profitable. Now, again, I want to echo what Dave said. There's always risk inherent involved with trading and investing. I've been doing this now for a long time. I'm not going to talk about risk today. We don't have time. But I would urge you to always trade with capital that you could afford to lose. Don't start thinking that when you're starting putting your money in the markets that it's protected. You are taking a decision, but I'm going to show you today how you can make a more informed decision about your trading and investing. Everything I'm going to show you today is not based on mathematics. It is not based on formulas. It's based on very simple universal laws that have been around for centuries. Those laws are the law of supply and demand, which drives human nature, the law of cause and effect, and the law of effort versus result. All of those laws are applicable to the movement of price. I'm also going to show you today why what you see and hear in the news and the media will not benefit you, but will influence you to make a bad trading and investment decision. When you become a customer of TradeGuider and MetaStock, where we have what we call the Smart Money plugin, you will learn to take advantage of the market when the news is bad. If it's bad and the price is collapsing in front of you, there will be a point where you can buy, and I'm going to show it to you today. There are times when you're told there is a safe haven where you should be investing. I'm going to show you today that's where you should sell. What you will learn today is contrarian. I make no apologies for this. I am a contrarian trader. What I'm going to show you today is both on live charts and on charts that are historical, because I'm going to show you some live stuff, that the markets are moved deliberately and are rigged. This is an article which, again, if you want a copy of this, just type in Richard Wyckoff market manipulation, and you will see here an article. It says the secret trading strategy from the 1930s that hedge funders don't want you to know about. And then just very briefly, it says the large operator does not, as a rule, go into a campaign unless he, and I'll add or she, sees in prospect a movement of from 10 to 50 points. Livermore once told me he never touched anything unless there were at least 10 points in it, according to his calculations. That was written in the 1930s. So writes Richard Wyckoff, the legendary trader who in the 1930s wrote a manifesto that gained him a cult following on Wall Street. His 1931 book, The Richard D. Wyckoff Method of Trading and Investing in Stocks, a course of instruction in stock market science and technique, is out of print and somewhat difficult to find these days, but not impossible. But even in 2013, when this article was written, hedge fund managers, like myself, still swear by it. One of the key takeaways from the book is that if you want to succeed, you have to recognize the professionals and understand what they're doing. That's what those who follow Wyckoff do. They watch the large operators. Wyckoff walks us through the process of how a large operator will manipulate a stock up or down, so that next time one sees it unfolding on the screen before his or her own eyes, he or she can react accordingly. So, my book was written 3 years ago now. It's called Trading in the Shadow of the Smart Money. I wrote the book because I was taught to trade like an insider. I was very skeptical. Please let me tell you this. When I met Tom Williams, the man that taught me everything I knew, 15 years ago, I didn't believe a word he said when I first met him, because I'm an ex-policeman. I don't believe things until I can prove them to myself. So I did due diligence, a lot of it. I went to London. I met some of the biggest traders in the City of London, some of them were friends of mine. One or two of them were using Tom's software. And I checked everything he told me, and everything he told me was true. He showed me that the movement of price on a chart is predictable if you understand what to look for. So, through my journey, don't ask me how I became a policeman and then became a trader, because I sometimes pinch myself each morning when I wake up, switch on my screens in my trading office, and then think of my days plodding the beat in Croydon in South London. Sometimes getting beaten up, sometimes getting assaulted. Part of the job, you know, that was my life in those days. Here, I now trade for about 3 hours a day. I have a family, a wife and 2 children. Both my kids were born in America, in Chicago. And I am living the dream. I love everything I do. But one thing I promised Tom when I first met him was that I'd share knowledge. Yes, I'll be, running funds, and yes, I trade privately, but I also believe it's very important, if you want to get on in life, share knowledge, and that empowers you to go further in life. And that's what I found. So what we're going to talk about today is the key objective for this webinar is not just for me to trade live, which I'll try to do. I'm going to be using my Infinity AT platform, which I've got open at the moment. As you can see here, I'm trading a live account, 4855, and I'll be basing my trading decisions using what I'm about to show you, which is VSA, volume spread analysis, and I'm going to show you shortly the Smart Money Tracker that's built into MetaStock. We've built it into the platform, and I have to say it's very good, and Tom Williams is using it every day, and he uses it the same way I do, is we're looking for trend alignment with indications of strength or weakness. So what I want you to learn today in this 1 hour with me is just to open your mind. I always have a saying that I learned many years ago. Your mind is a bit like a parachute. It's best used when you open it. So all I ask you today, listen, observe, see if I'm telling you the truth, see if I can give you the evidence. I'm imagining you as the jury, and I am the detective, unfortunately, with the name of Holmes. And don't ask me why, but I was born Holmes like Sherlock Holmes. You can imagine the laughs that used to come to court when Constable Holmes would come up for evidence. But that's sometimes what's helped me in my presentation of what I'm trying to show you, because I imagine that you're the jury and I'm just presenting the evidence. And that's what I ask you to listen to in the next 55 minutes. I'm going to show you how you can understand why the markets are manipulated. And then I'm going to show you that if you can read a chart, which is what we teach you, you can trade in harmony and make profit by following the manipulation of price. Andy, thanks for that one. My wife has actually mentioned that one to me, so I won't say any more about that. So what is volume spread analysis? For those of you that don't know, can I just ask, before I move on, how many of you here, just type in N for new, are here for the first time? You've never seen a TradeGuider presentation, you've never heard from me before. Can you just type in N for new? There's nearly 100 of you here, so how many of you here are new? I just want to get an idea so I don't lose you in my presentation. Okay, I just want to get an idea. A lot of our customers are here, I can see that. There's a lot of people here from TradeGuider. I can see that about 60% of you are TradeGuider users already. Hello, Andrew. You're not new. Yeah. Andrew's calling me a copper, by the way, because he's from England, and in England, copper was a term for police officer. Okay, so for those of you that are new, very briefly before I get to the meat on the bones, volume spread analysis is a methodology. Okay, it's not based on mathematical formulas. It's based on simple rules that move the market. Now, most traders, and I'll add investors because our software works in all markets and in all time frames. Most traders are aware of the 2 widely known approaches used to analyze a market: fundamental analysis and technical analysis. Many different methods can be used in each approach, but generally speaking, fundamental analysis is concerned with the question of why something in the market will happen. And technical analysis attempts to answer the question of when something will happen. Volume spread analysis, however, is a third approach to analysing a market. It combines the best of both fundamental and technical analysis into a singular approach that answers both questions of why and when simultaneously, as I will show you. At its core, volume spread analysis, or VSA, which is what we call it for short, is a methodology based on the original works and teachings, and this was mentioned earlier by Dave, of Richard Demille Wyckoff, a trader from the early 1900s. Can I ask the audience again a question, please? How many of you here have heard of Richard Wyckoff, the trader? Yes or no? Simple answer. Okay, so that's quite a lot of you. I'm not particularly surprised. So basically the method that Wyckoff taught seeks to establish the cause or the reason for price movement on a chart. The cause is simply the imbalance of supply and demand as the market trades, which will result in either strength or weakness appearing on the chart. Strength means the market will go up and you should be long. Weakness means the market's not looking good and you better get short. And I'll show you some live setups happening now in those markets. For the correct analysis of volume, you need to understand that the recorded volume contains only half the knowledge required for a correct analysis. The other half of the knowledge is found when observing the spread or the range of the bar, of the price bar, and the closing price on that bar. Volume indicates the amount of activity on the price bar, and the spread or the range of the bar shows what the price actually did, and most importantly, where the price finally closed. So what I'm going to show you today is volume spread analysis. We look at the volume, which is simply the activity or the cause of a price movement. The spread of the bar is what the price actually did during the time frame you're analyzing. So let's imagine that this schematic that I'm showing you is a daily chart of a stock. Like, give you an example. Let's say it's Apple. It could be any chart. The volume is the number of orders going through the exchange. Simply put, what helped me understand it is volume is activity. And please write that down. It will really help you to understand this concept. Volume is activity. The next thing we know is on every day of price movement, you get narrow ranges or spreads and very wide spreads. They're very important, and you'll learn how important they are. These are the footprints left by professional money. And so the range or spread of the bar is simply the high and the low of whatever the price did during that given moment. So in this case, let's say it's a daily chart. On that big volume, the price moved very widely and closed just off the top. And then finally, the close is that little tick there, that little line. That's the closing price where the market closed that day. And I'm going to show you why it's vital. Chart reading is like learning a language. Now, I'm currently learning Polish, and I'm trying to, for various reasons, because we've got a big representation of customers in Poland. And I've realized that to learn a language, you've got to keep practicing. Well, do you know something? To become a great trader and an investor, practice makes perfect. It's the same as golf. There are no shortcuts in life, unfortunately. If you want to make it in life and you want to be successful, some effort is involved. I had to spend 3 years writing a book, and that book has now got millions of copies all over the world, some that are on the internet, some that have sold. But those books, I've written 2 books, have opened people's eyes to the way the market works. And now what I want to show you is why it's very important to read volume. Now, I'm often asked, will volume or volume spread analysis work in all markets, including spot Forex? The answer is absolutely yes. It even works in Forex. Can I just ask the audience here, how many of you here trade Forex? Yes or no? How many of you here trade Forex. Okay, just please do contribute. I want to see if we can. Yeah. Okay. Okay. So quite a few trade Forex. Most people don't believe me when I say that volume works in Forex. I promise you it does. And if you go to TradeGuider.com, our website, you can download the first 4 chapters of my book, which talks a bit about how the markets work. It's in fact, Dave, if you could type that in, it's www.tradeguider.com. On the front page, you can download the first 4 chapters of my book for free. There's no charge. And if you want the video that goes with it that talks about the Forex, then you just put your details in and you can download it. It's completely free. There's no obligation at all. But the teachers that, I'd like to take credit for this this wonderful method and say, I invented it. Unfortunately, I didn't. What I've done is embellished it and added to it. But the originators are these 2 gentlemen on your screen, and I want to give them credit here and now. They're the masters. Richard Wyckoff, I'll talk about in a minute, but the man on the left is the guy that taught me everything I know. He retired at 40, a multimillionaire. He lived in Beverly Hills in California, where he was working with a syndicate, which is like a bit like a hedge fund today. I think that you'd probably call a syndicate a fund. So Tom George Williams, was born in 1929 on February the 4th. He invented the VSA method. He said if you can't read a chart correctly, you will understand the markets do not, or if you can read the chart correctly, you will understand the markets do not move randomly, but are moved by the smart money. And you can see their intention at support and resistance levels by looking for the telltale footprints hidden in the volume and price. And you have a chance to profit by following their footsteps. Volume is vital in your analysis, which is why the self-regulated exchanges around the world will not release the true volume figures until the day after trading took place. That's true. The self-regulated exchanges do not release the true volume information until the day after the trades have happened. Why? Because they know how valuable it is. Richard Demille Wyckoff was born in 1873 on November the 2nd. He passed on March the 19th, 1934. He was a stock market authority, a founder and one-time editor of the magazine of Wall Street, and editor of Stock Market Technique. He said, thousands of those who operate in the markets now recognize the fact that the market momentarily indicates its own immediate future, and that these indications are accurately recorded in the market transactions second by second, and therefore those who can interpret what transactions take place second by second or moment by moment have a distinct advantage over the general trading public. So, the game on Wall Street. Lots of news about it at the moment, but if you want to get involved in trading and investing, you must understand how and why the markets move. This is a book that's been written over 100 years ago. It's called The Game in Wall Street and How to Play It Successfully by Hoyle. This book is the basis for a lot of successful traders who've read it. Now, wherever there are markets, there are going to be professionals or specialists. And what I'm about to show you now is how the market truly works and how you will be wrong-footed when you look at news and information that's given to you. I'm going to start with a story of a commodity. Now let me ask you all a question, if I may. What was the safe haven for traders and investors in 2011, in August, when the S&P downgraded the US government and we were told the stock market was about to collapse? What was the safe haven? Can everyone remember? Let's see if anyone can get this. A few of you are typing in. What was the safe haven? It was widely reported. In fact, let's just jog your memory, shall we? I'll just help you with this. Sorry about my dog in the background. As you can tell, I live in the forest, so we've got a nice cocker spaniel here. Okay, you've all got it right. Okay, most of you said, a couple of you said bonds. That was also there. But actually, this is on CNBC, and most of the information you get about the markets, look at the date. That's the most important part about what I'm about to show you. So I want you all to please either mentally clock the date in your mind or write it down. Let me just shut the door, bear with me a second. Quite funny. I've just realised while the dog's barking, there's a donkey walking around our garden. That's what happens when you live in a forest. So here, look at the date. It's very important. August 2011, right? Is gold the only safe investment left? I mean, come on. Everyone's told gold is a safe haven, all right? Everyone is told this is your safest place to put your money. But I can assure you it was the worst place. And I did a YouTube video on this in September, in early September. I'm going to show you why. I'm going to show you the importance of volume. And then I'm going to tell you a story of a stock. I'm going to then show you the Smart Money Tracker running live at the moment in two instruments. It's a currency pair and a stock, one of my favorite stocks. And you'll see that once you know unusual volumes present, you can identify it. So I want to show you now a chart here of TradeGuider. And this is our real-time software, and it's got a number of features in here, but the most important ones we've built into the Smart Money Tracker for MetaStock, and Dave can tell you more about that at the end. Now, can everyone see my screen first of all? You should be able to see charts of the E-mini S&P futures contract on the left, ES, and on the right, the gold futures contract. And you'll see some indications, or what I call VSA indicators, and you'll see the current price. Can everyone see that before I move on? Everyone see that? Okay, good. Excellent. Okay. So, first of all, I want you to look at the chart. And remember, I mentioned to you that volume, which is down at the bottom of the chart, is very important. So I'll highlight it and bring it up a bit. Now, I want you to look at the chart and tell me on the E-mini S&P where you see the highest volume on the chart, and look at the date, and you should be able to see right at the bottom of the screen. Tell me where you see the highest volume. This is the dates down here, and this bar here was 2011 in November. Just so you know where I've actually got my crosshair. That's November 2011. So where do you see the highest volume on this chart? Okay. Okay, let's go, hold on, let's go here. Do you all agree with me then that can you see it? That volume there is the highest volume on the chart. Can you see this? Do you all agree? Yes or no? Do you agree with my statement on Detective Holmes? That's the highest volume on the chart, on the weekly chart. Is that a correct statement? Yes or no? Okay, it's actually on the 12th of August 2011. Okay. What colour is the signal in the VSA program here? Is it green or red? I just want to check we haven't got anyone that's colourblind, and I mean that with respect, because some people are, and there's a way around that as I'm about to show you. Someone asked me the other day, they said, Gavin, I'm colourblind, I don't think I can use your software. And I showed him, I said, sir, you can, and I'm going to show you how. I'm going to show you how now. So everyone agrees it's definitely green, good. Now, one of the benefits of the TradeGuider program is these indicators, although they're extremely accurate, as you can see, at the bottom of my trend line, you can see green indicators. This is weekly. So if you're an investor, you're looking for these dips in the market. But one of the things we learned, and Tom taught me, was when a VSA principle appears, we want to teach you how to analyze the chart. So we produce, if you left click on it, an indicator. Now, if you're colorblind, and some people are, you don't have to worry about the color of this indicator because it tells you it's an SOS. Sign of strength. Sign of strength. This is called a shakeout. It's done deliberately when the news is bad. On this week, S&P downgraded the US government and said it was pretty much, going down, and then suddenly on CNBC, oh my goodness, the stock market for the last 2 weeks has collapsed and we're predicting it's going to go to 500. That's what I heard on Maria Bartiromo's show. And yet I'm looking at this saying, no, that must be a shakeout. Professional money are buying the market. They're not selling. But on every news channel you switched on, I promise you, on that week, you will have heard exactly what I'm about to report to you. Ladies and gentlemen, We've heard today that S&P have downgraded the US government, and the stock markets around the world are in turmoil. Terrible. Absolutely awful. They've fallen dramatically. The exchanges are telling us that everyone is selling. They're trying to get out, but they've been told, guess what? It's a safe haven for gold. In fact, we've heard reliably from Goldman Sachs that actually the market itself is for gold is indeed a safe haven. So then you go and hear that we watch the news. Of course you do. And we go and have a look and we say, okay, so is gold generally a safe haven? Well, of course you look at the news, don't you? The stock price has plummeted. Gold has been going up for 12 years. So you think to yourself, okay, is gold a safe haven? And you go and look at what the price is doing. And it's been going up, and it's been going up, and it's been going up, and it's been going up. Well, the problem with that is as the price goes up, at some point, professional money will come in and take full advantage of the fact that you're buying, and they will come out with a forecast. And in fact, here it is. Okay, it's all there. I mean, again, remember, I'm just being the detective. This is in Reuters. Look at the date, 8th of August, 2011. So at the very same time as they're saying gold's a safe haven and the stock market's the worst investment in the world, guess what? The big banks come out and say, yeah, do you know something, guys? We're raising our gold price forecast. Yeah, we think gold is definitely safe for you. Please, everyone, come and buy from us. Come on. So what happens? Well, we'll go and look at the chart. The chart never lies, guys. Here is the chart. Now, here's the volume. Look at the volume on the 12th of August. Absolutely massive. Okay? Absolutely massive. And you can see here that on this massive volume, there's a red signal, not a green one. Buying Climax. One of the strongest indicators. If you ever see this, if you're a TradeGuider user, many of you are, this is telling us something. It's telling us that on this big bar where everyone is thinking gold's going to go higher, some group or groups or institutions are busily selling and saying thank you very much, and this can only have one effect on price over the following couple of years, and you can see it live. Gold's trading now at 12.59. I actually forecast it's going to go to 1,000, and it will, by the way. I know this for a fact. I don't have to guess. I've got a strategy called point and figure charting, which projects where price is going. When you're in a downtrend, a trend goes on a lot longer, as you'll learn, than you think it will. But what's most interesting about this, it doesn't just collapse. Gold just doesn't suddenly fall because they've got to keep people locked in at that price. But what you do see is at that price level in October of 2012, what we call no demand. Now you'll note everything here has a number. And when I show you it in the Smart Money Tracker in a second, you'll see it's the same thing. So VSA, simply put, is showing you two things. Number one, it's keeping you out of bad trades. So if you've got your MACD telling you to go long here, which you will, your stochastic, go long. Your MACD, go long. Possibly your candlestick, go long. Then you switch on the TV, Goldman Sachs, go long. What do you think you're going to do? Go long. And what's going to happen? You're going to get your backside handed to you on a plate. That's how the market works. It has to work that way. It has to have losers. But what I'm going to show you is actually, once you can read bullish and bearish volume, which the Smart Money Tracker does, the whole gameplay changes. Suddenly, you are the smart money. You're not the sheep, you're the wolf, because you can figure out exactly what's going on. So let's now go and we'll show you how this works in different time frames. Now, if we look at a story that was very, very, very in the news in 2010, and I will use a historical chart for this, here was the news. BP shares, now note the date, June 2010. BP shares plunge. They did. Okay. Group's market value down 44 billion since the rig exploded. By the way, this is most of you will know this, the oil rig. If you know BP, they had this massive spill of oil in the Gulf of Mexico. And on June the 12th, we had a principal appear in VSA which was staggering. And I remember being at MIT in Boston doing a presentation to the Boston Traders Group. And I remember it so well because when I said that Tom Williams, who taught me to trade, was buying BP shares, everybody laughed. Seriously, it was almost embarrassing. But 2 years on, the chart never lies. So let me now go and show you in TradeGuider and then in the Smart Money Tracker, which is running live now on a 240-minute chart, the BP stock. So we'll show you it in first of all, I want to show you this on a weekly chart as a stock. And I'm going to put up 400 bars. Okay. Again, I asked the audience. Now this here is up the top here is 2008. This is 2010, where I've got my crosshair in April. Where do you notice the highest volume coming in on this chart, ladies and gentlemen? This is a weekly chart of the US stock, British Petroleum, but it also trades in the UK. Where is the highest volume that you can see? And it should rather jump out at you as it does to me, but where do you see it? I know it's a little difficult to see, but what I'll do is I'll move forward a bit. Right, remember it's a weekly chart, so that's May. That's the end of May where my current crosshair is on the chart. That's the end of May. Okay, let's go forward a bit then. So do you all agree with me that here, on this bar here, is the highest volume? Do you agree with that statement, yes or no? Okay. What news announcement was made on that week? Can anyone remember? In 2010, the week ending 11th of June, what announcement was made on the media to the whole of the general public? What was told? Can you remember what it was? Well done, very, very good. Yeah, BP had to pay. The actual news, in case you forgot, this is why I'm presenting this to you, because you mustn't forget, you must always learn. We can't cap the well. Can't cap it. We can't cap the well. We're in desperate trouble. Okay, now, we've got a signal down here on that volume, which is one of the strongest that we have. And again, when I left click, what does it say here? Remember in gold, we had what's called a buying climax, which means it's the top of the buying. The public are rushing in buying, or the herd as we call them, professional money are selling. In this case, the herd, everyone's selling. Indeed, when I was at MIT Boston, all the guys said, oh, we're selling. I said, why? Why aren't you buying? They said, well, look at the news, Gavin. I said, yeah, but look at the chart. The chart doesn't lie. Now, let me show you something fascinating. Let me introduce you to the Smart Money Tracker in MetaStock. So Dave, could you switch the screen over to Gavin Holmes 2 so I could show my screen? And I want to show that same chart on a 4-hour time frame with an options trade that we took. If you could just switch me over to so that Gavin Holmes 2 is presenting, so I can show my screen. Great. Okay, thank you. Okay, it's just downloading the add-in. So what I'm going to show you now, everyone, is the VSA tracker, the Smart Money Tracker. I'm going to show you two charts here because we've only got 20 minutes left, but I'm going to show you a trade that I'm currently in the pound. I'm going to show you just let that download, just bear with me. Okay. And very shortly, okay, good. And again, please do let me know when you can see my screen. Okay, so I'll just wait for a few of you to confirm that you're seeing my screen. Menno, you're absolutely right. That was the start of accumulation, but you would not buy down there. Tom Williams didn't actually buy at that point. We bought slightly later. Okay, great. Thanks, everybody. Okay, so let me introduce you then to the MetaStock Smart Money Add-in Tracker. What this product's designed to do is to identify three things on a chart. The first and most important thing is volume, bullishness, and bearishness. Now, I'm a big believer that the way to make money in the market is to trade in harmony with the trend. But a lot of traders find identifying trends quite difficult to do, because you can have an uptrend on an hourly chart, a downtrend on a 4-hour chart, and an uptrend on a weekly chart. So which one do you trade? Well, what we've done with the Smart Money Tracker is show you where the highest probability entries and exits are. Now, I talk about the word probability because I don't want you to ever think that I'm introducing you to a buy-sell signal system. This is not that by any means. What this system will do for you is teach you to read the language of the chart. It's not a quick fix for if you're losing money and you're struggling in the market. Don't think you're going to buy this program today and be a millionaire tomorrow, because it ain't going to happen. And I'm being straight with you. The markets are difficult, but they can be overcome if you're taught the correct way to read the chart. Now, if you look very closely on this chart, you're going to see several things going on. Now, this is a 4-hour chart, so it's a 240-minute chart. So every bar is 4 hours. And you're going to see here, first of all, I want to show you that the market has bear trends, bull trends, and neutrality, which is great. Overall, you can see since the 22nd of April that BP has been bullish. And although I haven't got time to show it to you today, we have a scanner that uses the MetaStock data. I might have time to show it to you today, we'll see, which will show you which stocks are acting stronger than the index that they're actually in. Now, the golden rule, this is very important what I'm about to tell you. If you're going to trade stocks, you must trade in harmony with the index. So right now, what trend are we in the S&P 500? Let's use the US one. Are we up, neutral, or down? What trend are we in, do you think, in the S&P 500 stocks? I would agree with everyone so far. I have to say, it's definitely bullish, and there's no reason that's going to change. We do expect a breakdown in price in the next few days, only because we know that when a market makes a new high, it'll need a corrective phase. That's very identifiable. And on tomorrow, I will know for sure if that's going to correct next week. I'll know where it's going to go, because I can show why a market is going to do something with a logic behind it, not guessing, but using some simple logic based on universal laws. Now, in this instance, I want you to notice that we have these green diamonds, these little dots that you can see here, and these blue bars, which you can just see. And I'm not going to zoom in on it at the moment. I'll do that in a minute. But these green dots and blue bars are a trending system built into MetaStock, and they're designed to identify short-term and medium-term trend. The short-term trend is a lot more, what's the right word to use for it? It's very, very fine. It only looks at 2 or 3 bars, whereas the medium-term trend is looking at about 12 bars. And it's proprietary. I can't explain to you why we have those and how we do it, because that's the secret of the VSA software. But what it does is it identifies bullish and bearish volume. Now we can see here on this 4-hour chart that the market changes behaviour after these green indicators come in here. Now this one here, if you highlight it, is in a bear area. So I'm not going to go long because we're in a bear area, but it's telling me there could be a change in behaviour in the market. So if I left click it, you're going to see down here, it tells me sign of strength 15 has appeared in BP. If I left click on this web link, it takes me through, and Tom Williams talks to me. The man that wrote these and taught me everything tells me, and this is how I learned to trade. I just read these indicator boxes. Stopping volume, sign of strength 115. This indicator is based upon the action of 2 bars. This should be a down bar on volume greater than the last few bars, which can be gap down, often on bad news. The bar could close well off the lows to show demand has absorbed supply, which means the market's going to go up. More demand, market will rise. Remember, the professionals have to buy on down bars and will also cover shorts, which will add to the volume. Panic selling from those traders on the wrong side of the market is absorbed by the market makers, who now find the prices attractive. Some types of stopping volume appear over 2 bars. The first is a down bar on very high volume closing on the lows, with the second bar closing up. What do I mean by up? Very simple. A down bar, as determined by VSA, is a price bar that has closed lower than the close of the previous bar. An up bar, by its definition, is a price bar that's closed higher than the close of the previous bar. Hence we have an up bar and a down bar. But this is the terminology you will learn as you become a customer of TradeGuider. So there should be a down move behind you. Okay, well, we know for a fact there was a down move and we can see it. Okay, so we had a down move behind us, okay, just here. So we know that everything in that indicator is correct. But the problem is, why would I buy here? We're still in a downtrend. So what we teach you is the best place to buy is an uptrend, as the market proves to us that that stopping volume was a change of trend. And the Smart Money Tracker does that perfectly, and I'll show you how. So here we have the volume thermometer. Okay, now this is reading based on volume, price and range of bar if the market is becoming bullish or bearish. Here we can see bullish volume, and suddenly the diamonds have changed to green over the previous 3 days. Remember, this is a 4-hour chart. The bars have turned blue, and now we have a VSA signal coming in, and it's telling me that in an uptrend I have SOS. That doesn't mean save our soul. It's a sign of strength, and it means that the market has now, in a bull move, become strong, and this is something to pay attention to as a possible entry. So we left click the indicator, exactly the same as we did with the other one, and you can see it's number 87, sign of strength. By the way, if you were colorblind, at the moment, I'll tell you what, Menno, I can't make this one bigger at the moment. I'm going to zoom in on this, actually. There is a way of doing that, so just bear with me. I will do that. Let me just show you the principle first, though, and then we'll zoom in on a couple of these and actually look at them. So here we've got bullish volume. Now I think if I click on that button there and come down here, we can see it. There it is. Okay, so hopefully that will help you. We can see it's a down bar. The volume here is not very high at all, and if we click on it and click on this bar here, it's telling us that we've got a widespread down bar, what we call a shakeout. Now, if we look at a shakeout in the market, what does that actually mean? It's exactly the same signal as you saw in the shakeout that we saw in the S&P, but this time it's only on a 4-hour chart, so the volume is not going to be as high. And you read the dialog box, and after you see this signal in a bull move, we start to look for entries. Now you could have entered on that chart, but there is, if I just move forward here another indicator that appears right here. Okay, here it is. Now this is the most important indicator to see in a bull move after a shakeout. If you just learn what I'm showing you here today in this short seminar, when you see very, very shakeout moves, which means the price is violently marked down to wipe traders out of the trade, and then the professional money buy, in the future, they test the market. Now, please, for those of you that are new, the terminology test and shakeout is in my book, Trading in the Shadow of the Smart Money, which is available from the TradeGuider site. It explains these principles in a lot more detail than I'm going to be able to show you in this short seminar. But I want you to understand from this seminar, or just open up your mind to the fact that when you see unusual volume on a chart, it's very, very important. Okay, now let me show you a sign of weakness now in a live chart. We're going to go to the British pound, and I'm going to use the 4-hour chart. Okay, now this is delayed data, all right, and I'm going to show you, I actually shorted this earlier on the big account. I'm trying to get you to look at this so you can see, you've seen an up move, definitely moving down. Okay, secondly, let's look at this first bar here. Now, this bar here is one of my favorite indicators. Now, in my book, Trading in the Shadow of the Smart Money, I talked about a gotcha bar. A gotcha bar. Now, a gotcha bar is a price bar that's marked down very, very rapidly, okay, on high volume. And when it's marked down, it takes out prior support. And that's what this does. And if you read it, it tells you. This indicator is based on the action of 2 bars. The first bar is an up bar closing off the highs. The next bar is a widespread down bar closing near the lows with its high higher than the first bar. This is designated to lock traders who are into long positions into poor positions. Let's go and look at it. There's the gotcha bar. Now, this is a really important setup I'm about to show you. When the market goes back up to the bottom of the gotcha bar, and you see what we call no demand, where the volume is now much lighter, as you can see, on this up bar. So it's rallied, but the volume is declining. This is a serious sign of weakness. An up bar with volume less than the previous 2 bars shows lack of interest as the market rises. Study the background and look at the trend. Well, we know the trend is down and the background is a gotcha bar. So the logic for a short trade makes complete sense, because you've got weakness, downtrend, bearish volume, bearish behavior, and an up bar on low volume. What does that mean? Think about this. If you're at an auction and someone's auctioning a car, and the car is valued at $5,000, that's the true value. But the auctioneer starts the bidding at 7,000. 7,000, 7,000, 7,000. If no one puts their hand up because they know that's not worth it, there's no demand. He says 6,000, 6,000, 6,000. No one puts their hand up. There's no demand. There's low activity. 5,000, 5,000. Now a couple of people start to get interested. That's how the markets work. It's all about supply and demand. Very simple. Too much supply, the market will fall. Too much demand or lots of demand, the market goes up. What have we seen in the S&P? Demand. The market went up. What have we seen in certain other instruments? Supply, like gold and silver. Too much sellers. And that, ladies and gentlemen, is actually how the markets work. There's nothing complicated about it. And the Smart Money Tracker will give you in multiple time frames. By the way, this works. I'm using a 4-hour chart, but I could show you this in, say, a 15-minute chart. And you can see here, all the way down on the smaller time frames, you get a lot more indications of weakness. Here's one. You can see in a bear territory, you're looking for signs of weakness. Here, there's a sign of weakness in bear territory. That's what you're looking for. Okay? And when you see green signals, be aware that doesn't mean in a bear move, because you've got a green signal, you're going to suddenly go long. You're not, because you're still bearish. You wait for the change in behavior. Okay. Any questions so far? I've got 5 more minutes left, and then I'll is there any questions about the Smart Money Tracker? And then I just want to show you something. Okay, a couple of people typing, so I'll wait for you to finish. And Dave, can you switch me back to my other screen, please, to Gavin Holmes, not the Gavin Holmes 2? Okay, thanks. That's great. Okay. Now, I know a lot of the stuff I've shown you here today, and you know, there's positions that are there right now, but because I'm limited for time, I'm trying to get the message across here. I do want to show you, however, a service that we offer, and we actually do and will be featuring from June the 1st onwards, this MetaStock live tracker to actually send our alerts out. But we have an alert service called tradingthemarkets.com. All right, and this is the website here, and these are the example alerts. Now you can see here, and I just want to show you one that I think really sums up quite nicely. Now these are not the last 10 because I've removed the latest ones because you can still use them. I've got some of the older alerts, but you'll see here on the 27th of March, we did an alert to short gold. Okay, and this is sent by a video because we saw weakness in gold. Okay, and when we see weakness and we identify weakness, we look for clear principles. Now each of these here is a video which explains, and it's date stamped, so it's in foresight, not in hindsight, what the market actually did. Now what I'm going to do for all of you, I've made these public. All right, so I've made these public now so you can actually go and see them, because I know that people want to say, okay, well, everything's great in hindsight, what about foresight? So what I'll do is I'll post it in the room. There you go. And when we finish here, if you want some educational, they're only 6 minutes long, 7 minutes long. They're not long. You click on the view, but I'm just going to show you a signal that's built into the Smart Money Tracker for MetaStock, which is the highest probability signal that we have. Now, again, I'm not going to use the word buy signal or sell signal. I don't like to use those because I think people who buy those and say, oh, I've got a system that's buy and sell, probably going to lose a lot of money. Again, everything's educational, but this indicator here, which is in the Smart Money Tracker for MetaStock, is sign of strength number 36. It's called bag holding. Now, before I show you it, right, Laura's asking me, good question, why do you get green signals in a bear market? Very simple, because a bear market doesn't just collapse. Can't, not allowed to. Market makers have to come in and support the market. So they'll be buying in down moves. Has to be. How many markets do you see that collapse day after day after day and never go up? Markets are like a zigzag. They're like a zigzag. And the software is detecting where the zigzags are. Simple as that, Laura. That's why in a down move, we'll teach you. This is what you'll learn as a customer. There's a whole training course that comes with this to show you where you interpret a signal and buy or sell it. There are certain signals you never buy or never sell because they're in the wrong place. Doesn't mean the signal's wrong. It's just saying in a down move, there's some buying coming in and the market's responding to the buying. But I always trade where the trend is. If the bars are red, if the diamonds are red, and there's a red signal in a bear move, the probability of you making a successful trade is far higher than if you see red bars, red diamonds, and a green signal. What's the probability you're going to get that one right? Quite low. So it's all about the probability. Now, and Elizabeth asked the same question. Yeah, Victor, this will work in smaller time frames. Yeah, I could be showing you this. Well, I will. I'll show you it on a 1 minute chart. I'll show you it on a 3 minute chart. It's no problem. Let me just show you before. I've only got a few minutes left. This is a signal. Now you can go and view this actual alert and see what happened, right? This was Sign of strength 36. It's written about in my book, okay? So if you want to find out how, this is as close to, I will say, a buy signal as I'll ever give. And if you look at the actual stock itself, it was the NASDAQ biotechnology stock. It's a US stock, BIS, okay? And it was actually, I'll give credit, it was one of our customers that sent me out this alert. He said, Gavin, I've just seen one of my favorite signals in the software. Now, the thing that happens with this indicator, first of all, the volume is very high, okay? And the software in both MetaStock and TradeGuider detects it, ultra high volume. The range of the bar, what do you notice, everyone? Let's just put up less bars here. Let's put up 100, put up 90, right. What do you notice about the range of the bar compared to this bar here? What do you notice about the range? That's the spread, the high and the low of the bar. What do you notice? Yeah, that's right, Miwa and Miang, absolutely correct. Yeah, it's narrow. That's very important. What do you notice about the volume compared to the previous 3 weeks? What do you notice about the volume compared to the previous 3 or 4 weeks? Quite big. It's bigger than the previous week and a half. In fact, if I went back further, that's the highest volume for several weeks. So Piotr, that was the highest volume. We close in the middle. But most importantly, the next bar closes higher. That tells us that on that volume, demand overcame supply. Let's read this. A narrow spread down bar with ultra high volume. This is a rare indicator, but one of the strongest to appear. It should be into fresh low ground, which means the market's fallen. A point is reached when the herd panic and unload their holdings at rock bottom prices. The narrow spread tells you that the professionals absorb all the supply coming onto the market, effectively holding out a bag to collect the panic selling, hence the term. If they had done this, the spread would have been wide, okay? If they had not done this, the spread would have been wide, but it's narrow. So we now read and learn. There should be a clear downtrend in the background. There is. Remember, to stop a fall in the market, demand has to overcome the supply that is causing the fall. By its very nature, this has to happen on down bars. Look at the future. That came in on that day. Prices are now expected to rally strongly. Here's the low at 14. It went all the way to the top here at 22.50. Nearly a 50% gain. And by the way, did we alert you to that in foresight and not in hindsight? Absolutely. We warned you. If you go and look at that video, which I'll post in the room, it was date stamped.
Hi everyone, welcome to tradingthemarkets.com, the trading alert service using the volume spread analysis sequential trade setups.
So if you don't want to do all the hard work yourself and you want us to do it for you, that's what our service does. It basically warns you of an impending move in the market, and it's done by video. Now, as of the week after next, we're having a computerized system that doesn't even require a video. It just sends out the alert to you. And we'll be making an announcement about that to our database in the next 14 days. That's a very exciting announcement. And again, if you've got the Smart Money Tracker, you'll then be able to go and look at the signal for yourself. We've alerted you to it. We've warned you of the setup. We're not giving you trading advice. You have to do the analysis. You have to take the trade. You have to manage your risk. But all of these things we can teach you at the TradeGuider website. So if you want to find out more about what we actually do, then you can go to TradeGuider.com, and that's the front page. And on there is, if you go to TradeGuider here.com, you can download my book, the first 4 chapters, and a video on market manipulation. It's free. There's no charge for it. If you're already in the database, you've probably already got it. And to go to our main website, just click on this button. Sometimes you have to scroll down. Click on that button there. And if you want to find out about the MetaStock plugin, we've got a video which gives an overview here of the actual trading tools package, including the Smart Money Tracker. And that's a very good place to actually start your journey if I've piqued your interest today And if you think that what I've told you is correct, I'll just post that in the room right now. Right, Laura's asking a good question again, and so Laura, let me show you. In the Trading the Markets website service, we have a live trading room where I trade my live account. In fact, I'm going to be trading it shortly, but basically what we do, 8 days of the month, the Federal Reserve actually publish where the money is coming into the market, and it's given to the large banks. There are several of them who then move it into the market. That's why the markets move the way they do. It's not you or me, it's the smart money. Today, you can see a substantial amount of money's come into the market as there was yesterday. So that is why I know that Monday we tend to have what's called testing, and you can see here, not much money coming in, but this will move the market next week. All right, this amount of money. They have a big move on Tuesday. See if I'm wrong. Tuesday's the big day, and that's when we're at our live trading room next week. If you want to join, details are at tradingthemarkets.com. It's about $150 for the whole month, and that includes the alerts. But you can find more details at the Trading the Markets site. All right, I've run out of time, unfortunately, but I just want to say thank you very much indeed for to MetaStock, to Dave, and everybody there. They're a great group of people. We really enjoy working with them, and you know, we're very happy that we've managed to produce this plugin. Dave can give you details that MetaStock do special promotions that we don't do on the plugin, that we don't offer. So if you're going to think about that, talk to Dave directly or one of their team. Yeah, Andrew, you're asking about the Wyckoff analytics software, which is the upthrust and springs. That's still in development, and you know something, it's been the most difficult thing we've ever done, and I cannot say when I'll have it finalized. I hope it's going to be soon, but you know, identifying those two things, the springs, have proved very difficult. I thought it would be easy, much more difficult, but it's coming on. It is coming on, so it's looking good. All right, let's just have a... Laura says, what's going on with the euro and the US dollar? Okay, I don't have the data for that in MetaStock, but I do have that in my TradeGuider chart, so I'll very quickly look at that. And Dave, tell me when you want to kick me out. I mean, I'm just going to take some questions here for a few minutes. Okay, so I always start with the well, Laura, have a look for yourself. Right, Laura, let me ask you the question. Actually, it's my wife's name, funny enough. Where do you see the very high volume on this chart, Laura? So, Laura, where do you see, question for you, where do you see the very high volume on this chart? It's pretty obvious, but yeah, okay. Laura, what color is the indicator in the TradeGuider software? Is it? Yep, let's have a look. Let's see what it tells us the market's going to do. This is a 4-hour chart. So that indicator came in on the 8th of May. Oh, by the way, if you go to tradingthemarkets.com, I already sent loads of alerts to short the euro. I'm still short myself. But here we can see why. It's a trap up move. Look, professional money have stepped in and sold heavily. They've marked it up to catch all the breakout traders. Look, all the breakout traders here try and get long. We tell you to go short. By the way, if you don't believe I did the alert, I've done several on the euro, and any one of our customers in here will tell you that I mean, have we got any Trading the Markets members that can confirm that I issued short alerts a couple of weeks ago on the euro? So I don't know how many of our Trading the Markets members are here, but I promise you I did, because the market was yep, we definitely did, and that's why it kept falling. And you know, with the alert service, you can clearly see why. If you look at the logic here, Laura, what's going on? That is the activity of the massive banks around the world. If that was buying volume, you wouldn't close near the low, because if we look at it and we use the law of supply and demand, supply has to have overcome demand. Okay, and so it says this indicator is looking at the first bar and the second bar. It's looking at that bar and that bar, and it says very clearly, this is also this same signal I've shown you in the Smart Money Tracker. The first bar is up, closing off the highs. Means it's closed down here. This one here. The first blue bar, closing off the top of the bar. The next bar is a widespread down bar, means it's closed lower. closing near the lows with its high higher than the first bar. This is designed to lock traders who are long into poor positions. Guess what? Boom. Future. This setup shows weakness. Bang. And all the way down, we get the same signals coming in. Here and here. Ladies and gentlemen, volume spread analysis works. It absolutely works. Believe in it. Believe in what I've told you. Believe that the markets are rigged. Believe that if you're a herd member, you're going to lose money. If you're a smart money trader and you want to become a smart money trader, listen to Dave and MetaStock. They've got a great team there. They're very experienced. They know all about our product. Contact them and they'll tell you the benefits of trying it. So Tom would go short there, but I'm more conservative. That's correct, Mano. I am. Rui's asking features of stopping volume. Well, basically what stopping volume does is it holds the market up, sometimes for more selling, sometimes to change behavior. But Rui, all I'd say to you is that the best type of stopping volume is when the market's on very high volume, but the spread of the bar is narrow, with the next bar closing higher. Again, read my book. It's in there. It's very clear. I can't be any clearer than that and talking about that. Okay. Laura, yeah, we've got we've got a lot of Australian customers. We can connect you with someone in Australia. You just need to, if you've got any questions, the best person, funny enough, you can email is actually my wife who works with us. And funny enough, Laura, it's going to be very easy for you to remember her details because her email, if you've got any questions at all, you want a demonstration, you know, you're going to contact MetaStock, obviously, but you may have other questions, email Laura at TradeGuider.com. And if you're in Australia, there's an Australian Facebook community with lots of people contributing. So yeah, we've got about 4,500 Australian customers now. I've just been told. Yeah, I think, well, I knew it was up there at 5,000. So yeah, a lot. How high does the volume have to be on stopping volume? The best is ultra high, massive. That's when the market's going to turn, Rui. Okay, you're an ex-Pom, are you? I was going to say Beckett sounded British to me, so there you go. Nice place to live. What part of Australia are you in, Laura? Are you in? I've been 3 times. I've been to Australia. I've done Sydney. I've done the Gold Coast, and one of my great friends is a guy called Nick Radge, who's out there, who does a lot. Melbourne, yeah, I've been there too. So I've been there. Great place. Okay, I've overrun a little bit, but Dave did say I could have an extra 10 minutes to answer questions. Now, Dave's going to come in now, talk to you a little bit about the Smart Money Tracker. Just let me say a few final words. Number one, what I've tried to do today is introduce you to concepts that some of you already know, some of you won't know. Number two, the market manipulation message is very much in the media. Don't be frightened of it. It's a great thing for traders and investors who can follow it. I've made most of my money following the smart money, and you can do it too. And the most important thing, believe in your ability. I'm nothing special. Warren Buffett once said, to be a successful trader and investor, you have to have an IQ of about 25. I think I'm 25 and a half. But what gets most people into trouble trading and investing, said Warren, was their emotions and the way they feel. They look at the news, they look at the media, and they make bad decisions. When you become a customer of MetaStock Smart Money Tracker or TradeGuider, you will learn to trade in harmony, not against the smart money. God bless, take care, and thanks everyone at MetaStock for putting this seminar on. Goodbye.
Thank you so very much, Gavin. We love having you in our webinar room. I personally take a lot away from these types of presentations. The VSA, the volume spread analysis, as Gavin said, it works. It has a proven track record. It is what it is, and Gavin really has this thing dialed in. The users of the VSA plugin love it, and we want to make sure you have an opportunity to try it out. What we're doing here at MetaStock right now, for our MetaStock users who want to try the add-in, all you need to do is go to our sales chat link directly today, and they will actually set this up for you. We're going to give you 3 months access to it for the price of 1 month, just $149. So we want to make sure you have a chance to put this into practice. The systems are all included in the plugin. Definitely check out Gavin's advisory services. Make sure you have his book. You're going to be a better trader for it. But we want to encourage you to go to our sales chat link. For those of you who want to sign up for that, there's no obligation whatsoever. We're going to give you a few extra months with it. It's www.metastock.com/saleschat. Okay, and you need to mention that you were in this webinar. This is only something we're going to offer today. And so when you hop into the webinar or into the chat room, make sure you say, hey, I was just in Gavin's webinar today. I want to take advantage of the 3 months for the price of one on his VSA plugin, and we'll go ahead and accommodate you for that. If you don't have MetaStock, we'll give you that as well. We'll go ahead and give you a free base copy of MetaStock to try it out on, okay? We want to make sure that you're putting it into practice. We want to give you the whole summer to run with it and prove its worth. I feel like that's plenty of time for you to go ahead and know whether something is worth your while. We want to make it as great of an experience as possible. We're good at doing that, and we certainly have the right tool set here in the VSA tracker. Again, it's metastock.com/saleschat. I typed it right there into the chat box for you. metastock.com/saleschat. Make sure you tell them that that you are we're in the webinar just recently, this afternoon. Okay, we're only doing this today. Thanks, everybody. Thank you so much, Gavin. Terrific presentation, as usual. We love having you in the room. We appreciate everybody taking some time to be with us today. Best of luck in all you do, and have a terrific rest of your day. Thanks so much. Bye-bye.